Hello, everyone. Welcome to Wednesday's market opening bell. Following U.S. Treasury Secretary Bessent's statement that President Trump and Chinese President Xi Jinping will hold talks in the very near term to address trade issues, including export controls on critical raw materials. White House spokesperson Caroline Leavitt said the two leaders may speak by phone this week. Meanwhile, China's Caixin manufacturing PMI fell below expectations, fueling market hopes for economic stimulus, with Hong Kong stocks rising on Tuesday. The Hang Seng Index opened 123 points higher and later gained up to 377 points, reaching 23,535, closing up 354 points or 1.5% at 23,512. The H-share index rose 160 points or 1.9% to 8,519, and the Hang Seng Tech Index gained 55 points or 1.1% to 5,189. Total market turnover was 203.6 billion Hong Kong dollars, with southbound funds buying 3.905 billion Hong Kong dollars. Technical analysis: the Hang Seng Index has returned to the 23,100 to 23,600 range, indicating Monday's drop was a false breakdown. Markets will monitor U.S.-China trade talk progress, with the index expected to fluctuate within this range. However, China's Ministry of Commerce stated that the U.S. has baselessly accused China, imposing extreme measures like chip export controls, suspending chip design software sales to China, and revoking Chinese student visas, severely undermining the Geneva Consensus and China's legitimate rights. China strongly opposes this and has launched serious protests. Against this backdrop, a near-term call between the two leaders remains uncertain. Mainland China's markets reopened after a three-day weekend holiday, opening lower but stabilizing. The Shanghai Composite Index rose 14 points or 0.4% to 3,361, while the Shenzhen Component Index gained 16 points or 0.2% to 10,057. The renminbi central parity rate against the US dollar fell 21 points to 7.1869. The May Caixin China manufacturing PMI was 48.3, well below the expected 50.7, down 2.1 points from April, and below the 50 threshold for the first time since October 2024. Sub-indexes showed supply and demand shifting from expansion to contraction. The new orders index fell below 50, hitting its lowest since October 2022, partly due to U.S. tariff policies, with new export orders further declining in the contraction zone. Weak demand ended 18 months of production expansion, dropping to the lowest since December 2022. The National Bureau of Statistics May manufacturing PMI rose 0.5 points to 49.5, showing marginal improvement, but remaining in contraction for 2 months. The divergence between the two PMIs may stem from survey time differences, with Caixin's survey conducted earlier, possibly before tariff impacts were fully felt. Both PMIs below 50 highlight the negative impact of U.S. tariffs on manufacturing. In the Hong Kong market, China Everbright surged 15.5%. Public data shows that in 2016, China Everbright partnered with IDG Capital to invest in Circle and became its key global strategic shareholder. Circle, issuer of USDC, the second largest stablecoin, applied for a US IPO set to list in June, boosting USDC's credibility and market share. The largest stablecoin USDT issued by Tether in 2014 pioneered the one-to-one US dollar peg, addressing market volatility. By 2025, the global stablecoin market exceeds 200 billion US dollars, about 20% of the crypto market, with USDT over 100 billion dollars, holding over 50% share. Stablecoins like USDC offer price stability and high liquidity, with USDC's fully transparent reserves enabling instant cross-border payments at 10% of traditional banking costs. NIO reported Q1 revenue of 12.034 billion yuan, up 21.5% year-on-year, but down 38.9% quarter-on-quarter. Vehicle sales were 9.939 billion yuan, up 18.6% year-on-year, but down 43.1% quarter-on-quarter due to seasonal delivery declines. Net loss attributable to shareholders was 6.891 billion yuan compared to 5.258 billion yuan last year and 7.132 billion yuan last quarter. Adjusted net loss non-GAAP was 6.276 billion yuan. Vehicle gross margin was 10.2%, up 1 point year-on-year due to lower per unit material costs, but down from 13.1% last quarter due to higher per unit manufacturing costs from lower production. Q1 vehicle deliveries were 42,094, up 40.1% year-on-year, but down 42.1% quarter-on-quarter. For Q2, NIO expects deliveries of 72,000 to 75,000 vehicles, up 25.5% to 30.7% year-on-year, and revenue of 19.513 to 20.068 billion yuan, up 11.8% to 15%. At Xiaomi Group's 2025 Investor Day, brand GM Louis Wong said Xiaomi's phone brand continues to gain momentum, ranking top 2 in China. Globally, Xiaomi sees opportunities in both developing and developed markets, aiming to deepen localization, catch up with Samsung, and join the 200 million annual sales club. From 2023 to Q1 2025, Xiaomi's air conditioners, refrigerators, and washing machines achieved growth in both volume and price, with high-end air conditioners reaching an 11% share. Xiaomi's offline appliance distribution costs are 15 to 20% lower than peers. The market is closely watching the progress of U.S. trade negotiations with various partners and driven by chip stocks. U.S. stocks rose on Tuesday. The Dow closed at 42,519 points, up 214 points or 0.5%. The Nasdaq closed at 19,398 points, up 156 points or 0.8%, and the S&P 500 closed at 5,970 points, up 34 points or 0.6%. The Nasdaq Golden Dragon China Index, reflecting the performance of Chinese concept stocks, rose 0.56% at close. Among them, Alibaba gained 0.2% and Li Auto surged 6.07%. Chip stocks performed strongly, with Nvidia rising over 2%, pushing its market cap to $3.44 trillion, surpassing Microsoft to reclaim the top spot in US stocks. Broadcom climbed 3% and Micron soared over 4% at close. Apple and Microsoft saw slight gains. Alphabet fell 1.6%, while Amazon and Meta were weak. Elon Musk posted on his social platform X angrily, criticizing Trump's tax cut bill, marking a formal split between Musk and Trump. Tesla's stocks softened in response, with its earlier 3.7% gain shrinking to 0.5% and further declines in after-hours trading. A conservative Republican senator was the first to publicly oppose the tax reform bill, citing its potential to raise the U.S. statutory debt ceiling. The U.S. urged countries to submit the best tariff proposals by Wednesday. The OECD stated that Trump's aggressive trade policies have pushed the global economy into a downturn, with the U.S. being one of the hardest hit nations. The organization lowered its global economic forecast for the second time this year, projecting a slowdown from 3.3% in 2024 to 2.9%, with U.S. growth expected to drop from 2.8% to 1.6%, far below its March forecast. U.S. Bureau of Labor Statistics data showed that job openings in April rose by 191,000 to 7.391 million, exceeding market expectations of 7.1 million, indicating resilience in the overall labor market. Our stock pick today is Sisram Medical, stock code 1696. Sisram Medical primarily focuses on the research, development, design, manufacturing, and sales of medical aesthetics and dental equipment, home use devices, injectable fillers, and cosmeceuticals. The company specializes in researching, developing, and applying energy-based technologies to provide innovative solutions for medical aesthetics and related clinical indications. The group continuously expands its product portfolio, covering a wide range of beauty and health applications, including hair removal and regrowth, skin rejuvenation, accent and accent scar treatment, body and facial contouring, pigmentation and skin brightening, fat grafting, subcutaneous injectable fillers, tissue remodeling fillers, personal care, and cosmetic dentistry. Through its global strategy, regional adaptation approach, Sisram Medical systematically implements localized strategies based on in-depth analysis of industrial and cultural characteristics in various countries and regions. In 2024, the group's offices in the UK, Australia, UAE, South Korea, and Japan demonstrated significant growth in sales performance and profitability. To strengthen its Asia-Pacific presence, the group established a direct sales office in Thailand, Alma, Thailand, and launched Hilo, a pioneering subdermal hyaluronic acid moisturizing treatment. Profhilo uses a unique sodium hyaluronate solution to provide continuous stimulation to dermal cells. The product achieved immediate market success, with sales significantly exceeding expectations, further expanding Sisram Medical's comprehensive injectable filler solutions combined with energy-based aesthetic device treatments. In 2025, the group's efforts will focus on consolidating its leadership in strategic markets, Asia-Pacific and North America, including leveraging Fosun Pharma's resources in China to enhance market penetration and expand product offerings tailored to Asian sub-markets. Simultaneously, the group is shifting its business model from product-driven to clinic-centric, from B2B to modern B2B to C, and increasing high-value, high-demand advanced product categories to lay the foundation for upcoming innovative skincare concept solutions. These solutions utilize medical-grade AI technology to provide personalized care services. The new personalized formulations, combined with in-clinic treatments, are precisely tailored based on patients' unique skin characteristics and care needs. During treatments, the group customizes and freshly prepares products in clinic to ensure optimal efficacy. By integrating advanced scientifically validated ingredients with a customized approach, this new solution not only enhances treatment outcomes but also extends the benefits of aesthetic care beyond the clinic. Recommendation: buy at 4.6 Hong Kong dollars, target $5.1, stop loss at $4.35. I do not hold the above stock.